If you're self-employed, you could be paying twice as much self-employment tax as you need to. How do we fix that? Enter in the S selection, which brings along our good friend, the S Corporation. This simple entity classification shift can cut your self-employment tax bill in half, and sometimes even more, a lot of times. So that's our topic for today. We're going to walk through some forms so you can understand how this tax works, and more importantly, how and when the S-Corp is going to be your saving grace. Hey guys, my name is Andrew D'Amico. I'm a CPA of 3 years, count them three. I'm a partner here at Ledgerly alongside my friend and business partner, Mike Abrahamian, also CPA of like 5 or 6 years. Mike Abrahamian, also CPA, a little more seasoned than me. He's probably got 5 or 6 years under his belt. You can see it in his hair. He's going bald, shows his age. And together with Ledgerly, we're here to provide clients with tax advisory services, talking about tax savings, asset tax savings, improving our asset protection, and laying the foundation for generational wealth. If any of those three things speak volumes to do, please do yourself a favor and subscribe to this channel. Now on to our topic, self-employment tax. First, we need to understand what this is and who it applies to. If you're just an everyday W-2 earner, going to the office, working for the boss, the big man in the corner, this video is probably not for you because it doesn't apply. 100-foot view. Take a look at the tax, self-employment tax. If you're not self-employed, then this doesn't pertain to you. However, if you're a W-2 guy and you have a side hustle, then you're going to see this on your tax return. W-2 guys don't see this tax because their employer is paying half of the self-employment tax, and then you as a W-2 earner, this is getting withheld on your paycheck, whatever, every week, every 2 weeks, whenever you're getting paid. You see the Medicare and the Social Security withheld on your paycheck, and the employer is picking up the other half. But for my self-employed folks, you side hustlers, you small business owners, you guys just selling things online, when you have that small business, you are now both the employer and the employee. You're self-employed. And if you're not careful and know about this tax, you could be getting nailed on your Schedule C every year. With that, let's go to the form, shall we? So here we have our Schedule SE. Self-employment tax. Now, quick disclaimer, I've already pre-populated some of the forms for a later example we'll walk through, but on the face, Schedule SE, notice on line 2, net profit or loss from Schedule C. Right, this guy right here. And also Schedule K1 from Form 1065. That's a partnership return. That is not an S corporation return. But it says right here, net profit or loss from Schedule C, line 31. So we need to go to a different form before we even to start calculating this tax. So go over to here. We got our Schedule C, profit or loss from business. Notice sole proprietorship. There's no entity classification for your LLC, no tax classification. It's considered a disregarded entity, taxed as a sole prop on your Schedule C on your 1040. And it's a very simple form. You have your income up here, then you're going to take out your expenses. Maybe you get some auto or home office deductions down here. The point being, once you get to this bottom line, like Schedule SE was saying, line 31, this bottom line amount is going to picked up and pulled over back onto Schedule SE. And then from here, ultimately, you could think of the self-employment tax as about 15%. It's really 15.3, which is both the employer and employee portion of your Social Security and your Medicare, which is depicted down here, right, by that 12.4% and by this 2.9. But I don't want to go through this form. I don't want to fill out this form at all. If we enter in the S selection, we don't have to get to this form. We go straight to an 1120S, which is going to kick out a K1 from 1120S, as well as a W-2. Because with an S corporation, you could do an allocation between what your income is on the W-2, which is where the self-employment tax is going to be assessed, and then the remainder flow through on the K1, which avoids the self-employment tax entirely. Again, this W-2 amount is the only piece that's going to be charged self-employment tax, but it doesn't get pulled onto the schedule. It'll be taken out right here from your paycheck, and then your employer is going to have to match it and get a deduction for it. But it is still money out of your pocket. Pitch back over to our Schedule SC. Notice nowhere on this form does it say Form 1120S. That's an S corporation tax return. I noted earlier there might be some implications if you're in a partnership in an active role, but if we got an S corp, baby, we don't have to play this game on this form. So now you've seen the numbers floating around. Let's run through a quick example, assuming I'm just a single member LLC. I'm just on my little Schedule C here. No S corp in the picture. This is why people get nailed with self-employment tax. They have their side hustle. I put an example of myself. Let's say I'm doing some coaching lessons on the side. Had a big wrestling background. Actually going to start teaching in class once a week, but I digress. In this little scenario, let's say I pull in $150,000 and somehow I came up with $50,000 in expenses. At the end of the day, I get to $100,000 in net income. Now we know this is going to serve as the basis for our Schedule SE computation. We're going to get to apply this percentage, right? Backing out 1/2 of the self-employment tax. And then ultimately, I skipped a few lines to make this easy to read. Ultimately, we get down to our Social Security tax, which is 12.4 of line 6, right? My 92,350. And then also your Medicare, which is at 2.9. Again, you're paying both the employer and employee side. You total those up, just over $14,000 in self-employment tax. Now, maybe on the face, maybe you think that's not a lot, or you say, yeah, that sounds about right. But my friends, why don't we make an S selection and get over to the S corporation and do an allocation of my same $100,000 net profit? I'm going to record $50,000 on my K1, and then I'm going to give myself officer's compensation $50,000, right? I'm a single shareholder. I am the officer of my own small corporation. I gave myself $50,000 salary. The amount on the K1 avoids the self-employment tax, but now I'm only paying on the $50,000, not the whole $100,000. So you can't do this allocation if you're stuck on a Schedule C. The S corporation gives you that power. Now, these numbers seem very low because this is just on the W-2. This is only half of that 12.4% and half of that 2.9. So I went ahead and typed up what it would look like if we included the employer's portion, because again, you are self-employed, you're the employer. So it's going to be those same amounts, right? The 3,100 Social Security, the Medicare 725. Both totals get you to about 7,650. And if you go back to SE, 14,000, that's nearly $7,000 in self-employment tax savings. You cut the bill nearly in half. Let's bring it back now, y'all. I know that was a lot. And if you're like most people, you probably don't know a lot about the tax forms, let alone the tax code itself. If you're not an accountant, you probably don't like looking through the forms. Heck, I live in tax forms. I'm an accountant. I don't like it. But I know how these taxes work. I know how to read these forms. And I just wanted to help you guys understand it by going through the flow of the forms so you can understand how this tax works and how the S-Corp might fit into the picture. And you want to know about this before your side hustle or small business starts really taking off, because you could get nailed with self-employment tax. So I know that was a quick and dirty example, but there's two main things you're going to have to consider when you are making an S election or you want to get to the S corporation. Is number one, you're going to have another tax return, right? 1120S. It's a separate tax return. We're not on a Schedule C on your individual 1040. No, we had to pick up and file another tax return. So your accountant's going to charge you for another return. And then number two, you saw we brought up a W-2, but you're the employer. You had to issue that to yourself. So you're going to have some payroll costs. You got to get in touch with an ADP, a Gusto, a Paychex, a payroll provider who's going to help you run your payroll, whether it's weekly, bi-weekly, monthly, quarterly, whatever cadence it is, and then ultimately issue that W-2 at the beginning of next year. So those are costs you're going to have to think about. That's going to dip into those savings that we calculated, right? I know just quick and dirty examples like $7,000. Let's say you spend $3,000 between payroll costs and a tax return. Now your tax savings is only $4,000. But heck, it's $4,000. I don't know about you, but I kind of like money. I would rather have $4,000 than not have $4,000. But to each their own, I digress. We love this strategy. We love talking S-Corps. We're always educating clients, friends, family, and we don't just talk about it. We practice what we preach. Mike and I, we each have our own S-Corps, and we do this payroll allocation every year, and we're saving on self-employment taxes every year. So whether you already have a side hustle or a small business, or maybe you're just dipping your toe in the water and about to start and you want to learn more, check out the other videos on our YouTube page. Mike did a great video with a whiteboard on the self-employment tax, and I did another one about LLCs and why just setting up an LLC in of itself does not save on taxes, because that's a big myth out there. People think LLCs save you taxes. They do not. You can have an LLC and still end up on that Schedule C like I just showed you guys. An LLC is not going to avoid the SE tax until we make that election and we make that LLC tax as an S corporation. So check out my video on that. And if you like this video, please like, comment your thoughts, questions. We'd be happy to get back to you. And subscribe to this channel for more tax advisory tips. Thanks, guys. Stay handsome.